So welcome back to mForex and I'm Ming. In this video, I will share with you my experience about the basic term in Forex, such as pip, what is pip, point, lot, and spread. So in first of all, I want to start with what is pip, point, and the calculation of them. As you can see on the screen, the last digit on the number is the point. Yeah. So here's the definition of it. So pip and point are the terms that represent the smallest movement of currency pair in the forex market. And the second thing is, in the most currency pairs, the pip is the fourth decimal place and the point is the fifth decimal place. Yeah, in the rate of a currency pair. The next thing I want you to know is, in the most forex currency pair, the rates have 5 decimal places, but there are pairs only with 3 decimal places, such as gold. It has 2 decimal places. Yeah. So let's get started with the pair with 5 decimal places. For example, here you have the Australian dollar and USD and US dollar. Yeah, you can see here. I will take it here. The pip is the number in the 4th place and the point is the number in the 5th place. Yeah, as you can see here. And we will go to the example. For example, the Australian USD and the dollar USD rate is 0.82345. So the 4 decimal place, number 4 is the pip. Yeah. Is the pip if the rate goes up to 1.82355 and the pip increased by 10 points. So if the rate goes up to 0.82775, the increase is about 43 pips, equal to 430 points. And for the currency pair with 3 decimal places, we have here in GPY. In Japanese yen pair, pips is represented by the 2nd decimal number, point is represented by the 3rd decimal point in the rate. And so you can see on the screen is the example I have here. The current GBP GPY rate is 135.579. The 2nd decimal place, number 7, is pip, and the 3rd decimal place, number 9, is point. And the last is a special pair. It is gold. Pip is represented by the 1st decimal, point is represented by the 2nd decimal in the exchange rate. Yeah, you can see here. Here is the pip and here is the point. We also have the same example as these 2 last one. And for gold pair, if $1 go up or $1 go down, is equal to 10 pips. So we already know about the pip and what it pips and what it points. And here I will show you how to do the calculation. The pip values of each pair with different tails will vary depending on the rate of the pair behind the USD. So traders need to know how to calculate the pip value and they need to adjust the trade volume. With 1 lot and 50 pip take profit strategy, the Euro and USD trade will bring in $500 profit, and for the Euro and Australian dollar will only bring in $350 in profit. Yeah. With each pair we will have very profit. Yeah. So the calculation for the each currency for the each pair is very difficult and very complicated. So in the MT4 application, it will be calculated automatically, so we do not need to do anything. You can see on the screen, if I do trade a gold pair with 0.18 lot, it will bring me here around $30. If I do a trade with gold pair again with 1.18 lot again, but the profit I can have here is around $1,000 because the price go up. Yes. So in contrast, you can see if I do sell the USD Japan yens with 1.228 lot, I will have a loss here with around $500 here. Yeah, it is now too easy for trade to know how much we can win and how much we lost in this market with the MT4 application. Yeah, we do not need to know much about this calculation. And the next topic is what is spread. I want you to know about this because spread is the gap between the bid and the ask prices, and spread is the way brokers make money from you. Instead of charging a separate fee for transaction, they will charge all the costs via spread. And you need to know that because some broker will offer you two types of account. One is a classic and one is ECN. And with the classic one, they do not charge you anything. But for the ECN type account, they will charge you a commission fee when you open a trade. So brokers say they don't charge a commission, which is in fact it is calculated directly into the spread. So you need to know this. And we have two types of spread here. One is fixed spread and the other one is floating spread. Yeah, you can see here on the screen. And the most important thing about spread is the spread extension, and it is created by two main reasons. One is due to the law of supply and demand, the price difference between the buyer and the seller. So as the regulated broker can increase their income by raising spread compared to the price offered by the liquidity provider. And during the trading process, there are two times when spread reach its highest. The first one is the session between days, and the second one is the time of publication of the news, before or after the news. You need to know this to protect your account. So, how can we do to avoid spread extension? Yeah, so the first thing you can do is choose the right time to trade. It means that we shouldn't open a trade right before or right after the news publication. And the second one is you can choose the broker that offer you a trading a type of account with fixed spread. It is too much better for you. And the last topic I want to share with you today is what is lot. And lot is the term that represents the trading volume in the Forex market. And we will have two types of lot here. One is standard lot, and the second one is a mini lot, and the third one is micro lot, and the fourth is a nano lot. Yeah. And for the standard lot, you can see that in the application it will be displayed at 1.00 lot. Yeah. And the mini lot, it will be 1.1 lot, and the micro will be 0.01. Yeah. And the micro lot is nowadays a small volume you can place. You can do the trade on the broker. Yeah. Okay, that's all that's all information I want to share with you today, and I already share with you what is pip and how to calculate it, what is spread, and what is lot. Yeah, hopefully I will bring you the useful information, and I hope that I can see you again in my next video. Thank you for watching.